Forward with Alok Singh joining us on the show from BOI AXA, the CIO there. Alok, good afternoon. I was just taking a look at your funds. I think some of the stocks from the pharma and the chemical space really, got your funds into some of the best performing quartile. Talk to us, how early did you get in that space and what worked for you apart from that as well for good performance?
Yeah, okay. Thanks for that, Ajay. So, actually we went we started investing into chemical names quite early, when the first set of these pollution related issues started coming from China. And there was some amount of shift which started happening to India. And at that point in time, if you look at it, was more of the commodity thing because India had spare capacity. And that, we started building on and we started getting incremental data that allowed us to have overweight positions in specialty chemicals. And obviously that lead to APIs, pharma. So if you look at our overweight positions today, it ranges from fertilizer, pesticide, API, specialty chemicals, and pharma also. So, it's been there for us for last, I must say, over two and a half years. We have been running these positions. Obviously, what we have seen in last 6-8 months is that the conviction of the market getting pronounced over there, and we have seen price action over there. Having said that, if you look at still from those historical perspective, they still are in the middling kind of valuation. They are not expensive. And if you look at the forward growth rate and especially the quality of the growth rate, if you look at, this is one of the sector where you are actually seeing a quarter on quarter earnings upgrade. And so that's why we are keeping faith over there, and our allocations remain high on this category.
Right. What are the other overweight, underweights of yours, Alok, looking at the way markets have? Pharma has already run up quite a lot. Some of the underperforming areas, what exactly are you looking at right now in terms of opportunity?
So if you look at, the other sector which did well for, the market was IT. Now, typically, IT got sweet spot because of this pandemic issue and, cash being on there and the ROEs being protected because of buybacks and things like that. But if you look at actually IT had seen earnings downgrade cycle, and the margins from 20s came down to around 15s. But I think now we are seeing that there is a structural change in IT, and Indian IT can play a role in that, and that's why IT is one of other sector which we are positive on, and that has a higher weight in our portfolios. Financials is something which we believe that may turn corner now, primarily because if you look at the incremental data is decent. I will not say very good, but it's decent. And the fear of the pandemic and all which could have emerged again, and the markets may have reacted, but I think they will settle as they look at the more data, and the quarterly earnings are anyways around the corner. In terms of our underweight, I think we would be underweight. Obviously, we manage quite a few funds, so I cannot just paint it with one stick. But I think energy is one thing which we are. FMCG would be another one which could be underweight in most of our funds, barring some amount of consumer goods, barring there will be few tweaks here and there across the portfolios.
risk of the second wave, so as to speak, even lockdowns in certain parts of the globe, which is making market nervous. US technology stocks are kind of topping out and making emerging markets.
Yeah.
Dollar index is also rising once again, and then we are heading to US election in the next 40 days. Do you see this as a cocktail to be cautious in the medium term? Is there a near-term risk on the table which we should be cognizant of?
Right. So, well, if you look at, yes, there has been some surge in some of the European countries. But if I look at global data as an aggregate, still, if you look at number of deaths or, the cumulative numbers, I don't see any major diversion over there. And if you look at our Indian data also for last 1 week, not only the report overall aggregate, the aggregate number has come down. It has peaked around 1 lakh. It has in 80s now. And the number of positive cases are lesser than the recoveries. So I don't know whether to say that we have turned the curve or but certainly, it's not going ugly. While if you look at the market, I will read it this way, that after a wonderful run, we had a consolidation phase for last 2 weeks. And that is what may have frustrated many of the traders and all, because, running a position is a cost, but not for a long only fund like us. So I'm not too worried. And, if you look at it, has corrected from the top. Markets have corrected anywhere between 5 to 10%, which is an okay correction. Yes, the dollar index have moved up, towards 94. But if you look at, if I have to look at it, I have to look at it in conjunction with the bonds. Because if you look at, and if I talk of dollar bond, US treasuries, last 2-3 days, if you look at, while equity markets have corrected, dollar index have risen, but bonds have not rallied that much. So somewhere I think there is a disconnect. Maybe market is talking about stagflation, but I am not convinced right now. And I will be more worried if I see, bonds rallying big time, which I am not seeing right now, which fundamentally makes me believe that, at least the bond market, which is the lead indicator of the macroeconomics, don't see macroeconomic condition deteriorating as what maybe the equity market is worried right now. But having said that, it's not right to rubbish anything. We need to look at it, and if the data emerge, which as of now I don't see taking that shape, I see this as a correction which can be bought into. But yes, as you pointed out, going forward in next 40-50 days, we have an event which is a US election, which could be interesting, very interesting this time. And it is moving very unusual of US elections. So I think that I see as a risk, because even if I see Mr. Trump getting elected, maybe his focus may change, post winning the election. And I think that may pose some risk, but I think it is still at least a month away. And in today's volatile market, I think month is quite long, and there are lot of data which can emerge. But as of now, I think we are happy with our allocations where they are. We see earnings growth being there, and we will hold on to it. I think financials is something which I think we need to look at more carefully, and also IT, because if you look at IT, is in terms of the valuation, they are on the historic. If I look at Nifty IT and Nifty ratios, then we are close to where we saw it last in 2000, right? We haven't seen. So if I look at the ratio is around 1.78 or somewhere there, and we most of the time it has traded between 1.5 to 1. So certainly it is on a higher side, and there is a lot of expectations that the earnings will be better, and we are around the earnings season. I think we are expecting Accenture to come out with their numbers soon, and I think that is one of the lead indicators. But having said that, I think I will be cautious on IT as well, most because of the valuation.
Sure. All right, Alok, we'll let you go on that one. Thanks so much for your time and your thoughts on the investing environment. Let's take a short break. On the other side of the break, more news and updates.